Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming your way with the market recap for Thursday, the 27th of December. Having some technical issues because why not, right? Wouldn't be a week without a few technical issues, but I think they're mostly self-inflicted here today. Welcome, everybody. Hope everybody had a great day trading and are continuing to enjoy this this kind of holiday week that we're kind of dealing with right now, right? Really interesting day in the market. Well, I say that half joking. Gap down on the open, really just kind of drifted, and then the last hour and 30 minutes of the day, we saw a nice rally to finish strong. And good afternoon, Whitney. Hope it was a good day in the market for you. A nice theta day, right? Back and forth. You guys, you know me. I'm a theta guy, especially when the market's volatile. I'm always likely to be going with the trend. So days where very little happens are always my favorite days. Of course, we don't see that a lot, right? So should be interesting seeing how we close out here. Starting to get into some resistance areas. For the most part, we still have some room in a lot of areas before we test those major levels. But now we're kind of working into what could, potentially act as that level that kind of give some of these bulls some pause. But a really fun way to see how the market went. I'm not sure how you guys how much you were following it on the intraday, but we had our gap down on the open, traded bearish down in the overnight market, really went sideways and then kind of drifted and then started moving and shaking. We took out that high of yesterday. So technically speaking, and I guess we'll take it for what it is, but technically speaking, we made a higher high and a higher low today. Right, first time that's happened in a little while. So, yay bulls! Good to see. Now I was hoping, and again, as it was drifting down early, I was thinking to myself, this is one of the most boring down 2% days you'll ever see. I'm glad it rallied because, again, as someone who's looking for this as a, overall a bearish retracement opportunity, I didn't want it to happen that quickly. So Santa came a little bit late for me this year, but I'm happy with today's price action. Across the board, you're going to see things look very, very similar. Over on the S&P, we are at a challenge level now. At least I would consider this is not necessarily a major challenge. The big one is going to be around 25.5, which is kind of where we had all these bottoms. That's really, to me, the major level of resistance that we're working with. But we are kind of into a challenge area now, as well as having another day for those short terms or the shortest term averages to work down into a little bit closer. So kind of keep an eye on that 25. But to me, 25.50 is really kind of the big number, at least as it's currently situated. Over on the NASDAQ, we're a little bit closer. We're a little bit closer to that bottom point where we had that old double bottom from back here, not too far away from us, a little bit shy of 64. So we still have a little bit of room, but it looks like we're a little closer to a major zone, in my mind at least, over in the NASDAQ. Again, the intraday action was really similar. Of course, it's always how it is these days, right? Most charts to a very large extent kind of look the same. And surprise, surprise, here's the Dow Jones somewhere in the middle, getting closer and closer. This should be a big challenge. This was a big bearish signal when we broke down off of that here a little while back, right? If we go into a weekly time frame, this was a pretty significant break. That's what we're seeing, on their different indexes. So we'll see. Maybe there are some legs to this. I don't buy it. I don't trust it. But if there are, then they're about to get challenged, and we'll see if there's actually any conviction to this. And of course, lastly, over in the Russell, it's completely beat up. Fared similar. It's the Russell, though. It's definitely been, in a sea of red. It's kind of been particularly red lately. Same general intraday activity. Weren't really able to close, as strong, but we did see that rally over in the Russell as well. So kind of keep an eye as we approach that 1350. That should be another level of resistance for us to test. it's just really even in a nice little bull or bearish retracement, nobody wants to buy the Russell, it seems. So another day closer to that retracement. If for whatever reason you were on the bullish side of things, another day of bullish movement. So I'm happy for you if you were taking advantage of this movement. Obviously, keep an eye on the intraday. Just you don't have to watch it all day long every day by any means, but it's always helpful to kind of see how price develops. And we've talked a lot before that when there's no challenges, it's a lot easier to make a move, right? When we start to run into trouble, signals to the other side, then we'll see what we're about. But really not a whole lot changed today from yesterday, really, in my mind, at least from a technical point of view, pretty much across the board. Very, dull type of a day. Now, over in the materials sector, we did kind of work back into this old range. Now, again, this is one that wasn't crisp. It wasn't crystal clear. So there's not really a number that we can kind of zoom our eyes to, just more of a general area. But wherever you're putting it, we got fairly close to it here today. So these guys may be one of the first areas to have that challenge, that first real challenge from a technical perspective. At least the way it's looking right now. Yeah, it was an interesting day, Michael, for sure. It was just funny. I just kept thinking to myself that what am I going to talk about on the recap? It was the most boring 2.5% down day I've ever seen. And at least it gave me a little bit of something interesting before the day was through. So I'll take it. Over in the energy sector, again, still have a little bit of room to go before we work into that old support level, which was our most recent breakdown point. Overall, this continues to be, in my mind, one of the most bearish areas to be looking at, as it's performed even very poorly, even compared to other areas. Crude obviously not setting the world on fire, but we still have a little bit of room before we work into these resistance zones. Now, with all of that said, I mean, we know the drill. It doesn't have to, it's nice when it orderly moves up to resistance, gives us a doji, and then a small candle the next day to get us triggered in, right? And hopefully that's what happens here. But really, as we approach these areas, if we're watching for bearish retracements, now we're kind of working, high enough where it could theoretically at least probably start happening as early as tomorrow. We probably just don't really want it to. Probably, a doji tomorrow, a little bit of upward move, doji, reverse hammer, something like that would be all right by me. But over in the energy, we still do have a little bit of room before we work into resistance. Same deal with our financials. Definitely seeing some movement coming into the financials, up over 1% today. So they were one of our stronger areas. Now, take that with a grain of salt, of course, but one thing that is interesting is kind of where they're doing this. Those of you who know, Coach Mark, and me, Mark more so than me, but, we're big fans of long-term averages, not buy blindly or anything like that, but we pay a lot of attention to the 200, and we're a couple of the coaches over at Tackle Trading that do watch that 200 weekly. Interesting kind of how that development is going. I mean, very interested in seeing the close of this candle here for tomorrow to see if we are able to close back off of that. Obviously, you might not be a fan of that average, and I'm not going to, wouldn't encourage you to bet the farm on it holding or anything like that. But I do find it interesting that that's kind of how this is going to develop. Either a close above or a close below that should be interesting, but a little bit more room. Again, still just like everything else, we're not seeing buy signals other than intraday buy signals, right? And again, if you kind of think in phases or steps, we have to start by seeing some buy signals. But here, if we look at the intraday, well, this is a reversal pattern, right? It has to start here. That's, of course, what we look for in retracements. Let's let this happen when this trend turns around and becomes this trend again and lines up with, of course, the longer term trend. That's kind of the opportunity, at least I'm looking for when I'm looking at retracements. But we do see some intraday signals. Obviously, we got a lot of work to do across the board to get any real signals on longer time frames, but one step at a time. Over in industrials, did see some nice movement off of that trend line. Did kind of work up into some old, this old support level. Not a huge level, again, but it has, it was a little breakout point. It did act as a support level a few times. So this should be an area that's at least moderately challenging, in my opinion, as we kind of, move into the next couple of days of trading. For me, there are other areas that are easier reads. We looked at this yesterday, and maybe it's just me being a wimp. Wouldn't be the first time, won't be the last time, but this long-term trend line holding up on the industrials from a bearish point of view, as long as that's holding, I do think that there are better areas to be looking to go bearish. It's not like we're lacking on bearish trade setups these days. On the other side of it, if this trend breaks, I would expect it to be very easy to fill up this little space right here, which is going to take us down to this old breakout. Again, we're looking at the weekly chart. It's going to put us around 58.50. It's not a ton of movement. It could break about 60 into the mid 58s. But it shouldn't have a hard time filling that spot up if we do falter. So this is, again, one of those areas that I don't really think I'll be looking bearish, going into, early next week. But if we do take out this trend, I do think it will be an area that I'll have some real bearish interest in once that does happen. But again, that is a pretty long-term trend line, and you have to give it credit where it's due. It's held. A lot of areas can't say the same thing. Right. So, and good afternoon, Abel. Hope you're doing well, my friend, and hope you all are enjoying your holiday, getting a little extra time with the family, a little extra time to look at stock charts on the intraday. My idea of a good time. So over in tech, we've kind of worked in, again, not a major level. And tech, the tech ETF is a little bit of a messy chart because, we do have some, old support here. We have, this area through here. It's definitely a zoney area in my mind, at least. But we've kind of started to work into, again, it's been kind of easy. We talked about it, we talk about it a lot, filling up that space. And at least for me, that's how I think as a trader, is one step at a time. If we break this, where's the next stop, right? Obviously, nothing's 100%, but that really kind of helps me as I'm managing or planning new trades and things like that. We're at the first challenge in my mind. Pretty easy to fill. Of course, everything was easy yesterday, right? Definitely was down. One thing worth noting, we were down big in tech today before the intraday rally, well over 2% in the technology sector at the midpoint of the day. So it was, in pretty bad shape before we had that late day surge in the broad market. I don't know if that means anything, but probably worth noting. There was definitely some selling going on in tech for a large part of the day. I don't know, Abel. I mean, part of, probably it's probably a combination, probably some short covers, probably some, computer trading, some algorithmic trading, probably some intraday traders. Again, if you kind of think about, intraday mindset, right? Day traders are no different than us from a technical point of view. They're just looking at shorter time frames for their charts, right? So we have our gap down on the open here on the tech ETF, just as an example. We kind of drift down, then we kind of start moving back up. We take out the high, which would have been right through here, the intraday high, yesterday's high. So really, it's hard to say. It certainly isn't me, and I don't think it's swing traders, if you will, because again, most swing traders are going to be looking to go with the broader trend as a general rule. I know I certainly am, but it's probably a combination. It's probably, I mean, there's a lot out there. And the one thing that you always want to keep in mind, or it'll drive you crazy, is just because you wouldn't do it and you can't, you would never do it. Like, who would buy this chart? I have no idea. I would never buy this chart under any circumstances, regardless of what the ticker symbol next to its name was. There is no way that I would buy this chart. But don't confuse that with nobody would buy this chart, right? So, it's really easy to kind of get caught up in that mindset of, well, this is a bearish chart. Well, I think it clearly is a bearish chart, but that doesn't mean somebody out there, for whatever their reasons are that I probably don't understand and probably never will, aren't willing to buy it, right? And so that's always the way that I try to think of things is, we're weird. People are weird. We can get in our head, and a lot of times an opinion almost becomes a fact to us, right? It's, well, this is a great bearish rate retracement. I'm going to be zeroed in on a bearish retracement opportunity, and I think I should be, of course. But that is what we tend to do as people, and so we always want to kind of always try to respect the other side. That's something I always try to do, is think of the other side's argument. And if I can't come up with an argument, it's a pretty good trade setup. So that's how I kind of look at it, at least. Over in the staples, again, really nothing to see here. In my mind, this is a very appealing area for some, some short trades going into next week or the next maybe 2 weeks. It might take a little while to set up. We've seen breakdowns all over the place as this sector has, really taken a beating the last couple of weeks. Saw some really, big turnover. This support level is definitely an area to be keeping an eye on. We'll go to the weekly chart here really quick. A break of this is going to look really nasty to me. Obviously that hasn't happened yet. It may not ever happen, but that is going to scream sell to me. If we go into a monthly chart, we'll go all the way out. This support, to me at least, is a very important area. If this breaks, we've triple topped, we've completely taken out trend. That is a pretty strong sell signal if, of course, and only if that ends up happening. Obviously, working up into a bearish retracement, though, with the way that the charts within that sector as a whole are looking, I definitely am interested in looking for some bearish retracements in this area going into early next week. Obviously, we're much like everything else. We don't have any of those signals yet, so we're not going to get them tomorrow. If it sells off heavy tomorrow, it's going to have to do it without me. Hopefully, we can drag this into early next week on our retracement and then start to see some signals. But we will have to see. But yeah, this is a really important area of support in my mind. Probably the biggest area, as I'm just kind of looking around at the sectors individually, that seems like the most important area to me today, at least. Maybe it should, maybe it shouldn't, but it does. So over in the utility sector, we're able to carry on off of after yesterday's momentum. Again, this is an area that I think we want to be really careful of. It's, not as far gone as the staples chart, but this is how it kind of began right now. I'm interested in letting it rally up, get some sell signals. I don't even know if I'm going to be bearish when I get some sell signals, but what I would really like to see is rally up, create that, whether it's in the trend line, create, a high somewhere up in here, see some downward movement. I think there'll probably be better areas to go bearish in my opinion, at least. So I probably won't be thinking about bearish in the utilities. Let somebody else be bearish in the utilities, work it down, then see what happens. If we create a higher low and take out resistance, I can get back on board with it. I really don't like the way this chart looks, but I honestly don't really like the way it looks for anything. To be quite honest with you right now, I don't think it's a strong technical chart. Either way, it's pretty choppy. I think you could make a legitimate argument on both sides of the coin. And whenever you can do that, I think you should leave it the heck alone. Over in healthcare, did see some nice movement. Again, another one of our areas that was up over 1% here today as we continue to feel. Yeah, I mean everything's probably a stretch, but most stock charts are looking pretty darn bearish, and so we want to pick our shots, right? Right or wrong, I think it's going to be, more opportunities in energy to the downside than utilities. And I can't trade everything. I'm not going to go super bear, and go all in, if you will, on the next set of swing trades that develop, in the next week or so. And so right or wrong, I mean, you have to say, yeah, someone else can have utilities. I'm going to be looking at, at materials, or I'm going to be looking at, financials or whatever it might be. No reason we don't have to push our luck, to find some bearish trade setups, right? So we can be very, very picky. We always should be picky, for sure. But we're not going to have a hard time finding bearish trade setups going into next week, I don't think. With a couple of days in a row, unless tomorrow is another huge day of selling, which then I'll have to eat those words. So hopefully that's not the case for lots of reasons. Over in healthcare, continuing to work into the space. We are working into that 9 EMA. Again, not a brick wall or anything like that, but can and oftentimes will act as a resistance or a support catalyst. That should be a little bit of a challenge, but really probably got a little more room to go from a overall perspective in this sector until we start working into more significant levels of resistance. So this could be one of those areas, if we get another couple of days of rally, could present some really interesting bear retracements. If we kind of start selling tomorrow, then maybe there's going to be things a little more interesting, say, maybe in the material sector, to me, at least. So we do have a little bit of room to go. But again, anytime now, we could probably start to see some sellers come in. We know that folks aren't afraid to do that, quickly to the point. Really over in the discretionary sector, again, price-wise, we're kind of working into that old support level. You could probably argue that it closed a little bit above it. I wouldn't make that case. I would say it's there, not that it really matters all that much to me, but I don't think I would, call it a break. Oh, absolutely. Right now, the simple reality is until things kind of start simmering down, Abel, I think the best approach is much like we've been taking, over the last, month and a half, 2 months, whatever it is, just assume that it's going to continue to behave this way. We're clearly in a downward trend. The market clearly is, not afraid to sell. Volatility is still high. We're still seeing a lot of movement on the intraday, day to day. We're seeing big ATRs. And so, yeah, I think right now, until the market starts to, either slow the trend down, right? And that might happen. And eventually it probably will happen. Or it starts to, develop some floors, right? Right now, everybody's going to call this a downward trend, right? The only difference is going to be some people are going to say you can buy it and some people aren't. I would say you can't buy a trend that looks like this, but everybody's going to call it a downward trend, regardless of how different we might be and how we're planning on dealing with it, right? And until we start to see, any signs of that changing, I would expect that we probably should, probably prepared to see more of the same. Oh yeah, absolutely. Right now, in my mind, it's always the call, Abel. You always go with what you're seeing, with what's going on in the market. Doesn't have to make sense to you. A lot of times trends don't. Again, we get in our own heads and how much lower, how much higher can it get, right? And the answer is usually quite a bit. Right now in my mind, sure, if this is theoretically going to be a V-shaped recovery and we're going to bounce up and move, there's a lot of upside, right? But the simple reality is there's no signals to suggest that that's going to happen. If that does happen, well, good for the people who are, playing the bottom, I guess. So yeah, in my mind, at least, Abel, right now, again, we have to see that next wave of selling, even if you are on the bullish side of things, or you think we're hitting the, developing a bottom, or we're looking to develop a bottom. The simple truth in my mind is you have to see the next wave of selling before you can act. That next wave of selling, because some people are going to go bearish into this as soon as we get some sell signals. Is it enough? I don't know. But some people are going to, I promise that. So let them get in. As it drops, they're going to be feeling pretty good about themselves. If we create that higher low and then take out resistance, well, that's going to be a buy signal. Now, not everyone's going to take it, but if I'm bullish on the market or bullish on the sector, that's exactly what I'm going to be looking for, because there's just no signals here. We're going up. That's okay, but all the signals are still to the downward side, I think pretty easily to say right now, at least. And again, things can change. We might be having a much different talk at the end of January. Nobody knows the future, but hey, we've got to break some resistance first, right? That's always the first step. If you can't break resistance, you can't go up very far. Always a good thing to keep in mind. So over in real estate, again, kind of a choppy chart. I think we can do better, but we did see some upward movement. We are working into this area. If we start to see some, we'll probably need a few more days of candles for this to maybe develop. But if we do see a little bit of a base right here form, maybe we can find some interesting signals, really one way or the other, going into late next week or maybe 2 weeks from now. Right now, it's a pretty tough read in my opinion, and I think the weekly chart says it best. This thing is really sideways, right? Again, I guess you could argue, assuming we get a clean close tomorrow, that hey, we've got a hammer candlestick, maybe we'll see some buying. I would understand that argument. I wouldn't make a trade based on that argument by any means, but I think this is an area that's very on the fence right now from the looks of the charts that you're seeing. A lot of them obviously, are looking pretty rough from our break back through here. But again, it's not very settled to me. There's more settled areas, at least in my opinion. And lastly, our good friends in the communication services, another upward, not much, but technically a higher high and a higher low today, as we did see, more money coming in. Again, much like tech, things weren't looking so hot, anywhere, but these were, tech and communication services were definitely some of the worst performers, around noon, my time, a couple hours before the market closed. So we're definitely going to have opportunities develop going into next week for bearish retracements. There's really no doubt about it. Whether we're taking them or not, that's, maybe we are, maybe we aren't, right? We're all going to make those calls individually, but it's not going to be because we don't have opportunities by any means. As you're going through your watch list, as you're kind of scouting and preparing for trades next week, I mean, really kind of go through, this exercise, and hopefully you're doing that on your own. I know it has always helped me, get an opinion on the sector so you know what you want to focus on. It doesn't matter if I'm right or wrong about, I'm going to kind of shy away from real estate, going to kind of shy away from utilities, in this next wave of bearish retracements. It's just going to help me kind of put together a plan, right? No reason to spend time looking for real estate stocks that I'm not going to trade next week, right? When I can be finding tech stocks or material stocks or whatever it might be. So, as you're going through, your routine this weekend and looking for new trades, kind of keep that in mind. You're going to find more than you can trade. So whether or not we trade them, whether or not it works out, we're going to find so many bearish retracements going into next week. It should be fun. It's going to be fun to go through and shop around, no doubt. As we kind of shift into the dollar, again, really this is from a swing point of view, really a nothing to see here chart. We continue to go sideways. It continues to be a pair pickers market. So, if you're intraday playing, pairs makes perfect sense. You probably like this type of a market. Just kind of watching how the overall dollar is performing. We really are just another day into a pretty sideways move. So really not a whole lot's changed over there, and probably going to take some time, but the longer it goes, eventually it is going to break, right? Maybe give us a signal that we're interested in. Now over in the metals, gold, again, good solid day, good solid place to be, no doubt. We continue to bump our head at that 1280. No real surprise. Again, we saw that one as a potential threat, right, in the short term. Again, I don't think you go bearish off of that, but if you take profits, makes perfect sense there. We took a good run at it, and we did sell off of those highs. Nothing dramatic. Does appear to be kind of our primary short-term level of resistance right now. But again, whether you're in gold, looking to buy if it breaks above it, looking to buy if you get a pullback, whatever it might be. I mean, clearly this is a fairly bullish area to be in right now. If you go into a weekly chart, I don't know if we've done that. I think we did it yesterday actually. We've got some room to work with. Yeah, we've got to deal with this 1280, and it's caused us a couple days of problems now. Not dramatic, but we've struggled there, no doubt. But really, if we can clear that, probably fairly reasonably easy way or path up to that 13. From our prices, it's probably a little higher than 13, but I think we probably should call it 1300. That's a nice round number, and it's easier to say 13 than 1303 for most people. So, but if we can clear this, shouldn't be that big of a deal to work our way into that range, in my opinion, at least. So it should be interesting. Again, if we are, in a bullish, it can be a very interesting place, to take profits, can be in a very interesting place to, sell calls against your position or convert into a bull call spread or something like that. But can't really complain with the activity. If you look at the hourly chart, I don't know how useful this is, but I do think it's kind of interesting. We now have, this is, pattern I love. It ran up, pulled back, ran back to resistance, pulled back. If we can create a higher low through here, take another run at that resistance and break it, obviously we have to break it, would be a nice little intraday breakout candidate in my mind if we can develop that way. So, and of course it makes a lot of sense where it is, right? Because we've been here before, played at this price point before. So things are still pretty good in the metals markets. Over in silver, they did kind of bump their head on that area before ultimately pushing through. We'll quickly come into the intraday chart to kind of see how that looked. Once they pushed through, you can kind of see that they were able to hold that old resistance as a little bit of a support level. So overall does continue to be a very strong area, and the metals have been pretty solid. Got a few areas to keep an eye on. Obviously, if we pull back from here, it's not, the end of the world or anything like that. The 200, something to keep an eye on. Again, don't want to look at it like it's a, brick wall that we can't get through. Just want to note it, especially from a management point of view. If you're the type of trader that's, looking to take profits, you always want to identify those areas. Well, this is where I'm going to, I don't want to sit through a pullback. A lot of traders don't want to sit through pullbacks, and that's fine. So that would be an area that we can keep an eye on. Certainly up in this area is probably the next, price-wise level of resistance. We have a lot of history back through here, as you can kind of see here, going back a little bit further at around 1575. But other than that 200-day moving average, a relatively clear path between here and there. So I would expect these areas to overall continue to maintain their bullishness personally. And like I've said yesterday and in gold for a while, if as long as what you're doing, from a bullish point of view, fits your rules, fits your risk tolerance, I really have no objection to what people are doing bullish with metals right now. And that's why it's so important to have lots of areas to trade, right? Because this has been a pretty easy, well, I can't say that for silver. Gold, I can, because silver I was waiting for 15. In hindsight, I didn't need to, right? But for gold, it kind of developed a little sooner. It's been a pretty smooth run. You compare this chart, not just the upward movement, obviously that's vastly different than the stock market, but just the day-to-day behavior. It's been a lot more, well-behaved. At least I think it has. There's always something out there that's being a little nicer than other things. I don't know if natural gas is one of them. It continues to show a ton of volatility and move a ton. Nice solid close today. I still don't know what you do about it. I still don't think there's any great swing trades that have developed off of it. Maybe if we can close, a little bit up tomorrow, close a hammer candlestick and get a nice upside open, maybe. But really, honestly, again, it'll happen. It just doesn't look like it's going to happen for me in the next week. Don't really see how we can expect the volatility to die down. I don't really see a clean argument either way. About the only argument I think you could make coming back into that weekly chart is if we close up above here. So if this was today's close, then we'd need to be up a little bit higher. But if we're able to close back on the right side of this breakout, this old resistance level, maybe you could make an argument that there might be a bullish setup. In there. Obviously, we have another day of that before we can even have that hypothetical conversation. I still think it'd be a very difficult thing to trade. In my opinion, I don't think I would trade it. But maybe we could see that. Abel says that does it mean anything when prices are up and volume is down? Yeah, it just means there's not really a whole lot of oomph behind it. Whenever you see something break or whenever you see something running one way or another, you kind of like the idea, at least I think you do, of piling on, if you will, Abel. The more people that are buying, if we all look at a chart on whatever the ticker symbol might be, and we all say that's a very good, buying or selling opportunity, and we all jump in on it, we're kind of just helping each other out. At least that's how I view it. To answer that question for you, the more volume that we have as we're seeing these moves, the better, in my opinion, because it looks like more and more people are on the same page. When we have these low volume, especially when we have upward moves in downward trends on low volume, it may or may not mean anything, but to me, it means don't trust it from a bullish point of view. Again, if we're playing things on the intraday, taking advantage of short-term bullish movement on the intraday, I've got no real objection to people that are doing that right now. But if it's going anywhere beyond that, if that volume's low, we're going against the trend, we're probably not seeing a lot of conviction in that buying. And so that's how I will read that. Yeah, exactly. And usually, that is fairly normal, Abel, this time of year. Usually during the holidays, volume does die down. And so, that's just something to, most holidays aren't nearly this exciting. So most of them are relatively dull. But generally, you do see volume die down in the holidays. But if we're seeing these, bullish moves in bearish downtrends, or vice versa, when we're in those nice upward trends and see very low volume selling, usually that's kind of a sign that it's a little bit of a retracement developing. There's not a lot of conviction. Basically, short-term traders are in charge right now of this upward move. It doesn't appear, at least to me, that it's anything other than that. If there was more volume, maybe we could make a little bit of a different argument. So, yeah, so that's kind of how I would view that. Does that make sense, Abel? Hopefully that, gives you at least an idea of how I'm looking at it. But yeah, if low volume, when you're going against the trend, those are things that can make for really good retracements, in my opinion. Obviously, the chart still needs to line up. We still need our sell signals, but it doesn't appear that there's a whole lot of conviction. Now, maybe it's just because it's the holidays, but my suspicions are it's because there's a lot of people out there like me that are saying, you don't buy this. How can you buy it? And maybe I'm right, maybe I'm wrong, but I'll never understand people who are legitimately buying into this move over the last couple of days. So exactly, Abel. So, yeah, always fun to see that happen. But yeah, I mean, it is pretty normal to see volume die down during the holiday season. It's generally a nice, easy theta time, and it's really not been too rough, overall this December. But it's definitely been moving more than normal. So, lastly, our good friends over in crude, really kind of a nothing to see here day. We're not able to carry on off of yesterday's nice bounce. Didn't really develop any signals one way or another. I wouldn't mind a little bit more of a rally before we, and ideally have some sell signals develop, but really not a lot changed here today over in the crude market. You can kind of see just with the, way the day played out, we've kind of went into a little bit of a sideways range, and it's really early. And obviously this would be more of an intraday way to look at things than a swing trade way to look at things. But, if we continue to build off of this, push back down, breaking through here probably would present a short-term, sell signal. Breaking back above probably would create a little bit, and again, I'm meaning short-term, so we're day trading on not hourly time frames probably. So we probably do have a little bit of development for some intraday stuff going into tomorrow, assuming we can break out one way or another. But from a swing perspective, realistically, we want it to do very little, right? Or rally up slowly on that low volume, right? So a little bit further, anywhere up to and including $50. Now, I still don't really think that we're going to rally into $50, although, I certainly don't know that we won't. I would love to be wrong and have that happen. I just don't expect it to. But we probably are, and again, from a swing trade point of view, 43, I think we have to respect. Again, it's kind of like those numbers that I think as you look at 43, I don't believe that it's the bottom, but I think we need to treat it as if it might be. Because again, looking at a weekly chart, we have a lot in that 42 to 44 range. Most of us called it 43, but in that ballpark, we've got a ton of history here. And again, I'm not buying off of that history, but you got to respect folks that are. Right, because that is a trading style. Whether we're good with it or not, folks are willing to buy off of that support. So I do think we need a little bit more of a rally up if we're going to get a bearish entry. Because it's one thing if we get in at 48, and hey, if we go to 43, and that is a major support level and that holds, there's still some profit potential. But if we get in here at 45, that's an awfully tight rope to walk from a risk to reward point of view. So in my mind, at least, right now, you have to be looking at 43 as a big deal. You don't have to be buying off of it. I'm certainly not, doing that. But I do think I think as you look at the weekly chart, the evidence suggests that's a pretty important price point, at least warranting enough looking at. So ideally, we get a little more of a run. If we get selling in, if we break it, breakdown opportunity for sure. But I think obviously we'd probably like to see a pullback. I think we need to get a little bit higher if we're going to get that opportunity, because again, how do you go short at 45, knowing that there is a lot of support at 43? There is a lot of history at 43. There's just the risk to reward is just not there in my mind. But again, at 48, a little bit of a different story, right? At 48, hey, we go short at 48 and 43 ends up being a big deal. There's still $5 we can go after. We've got a strong level at 50. So, our risk to reward's well over 2 to 1. So a lot of it's going to come down to where does this develop for me, at least, in the next few trading days. So going into maybe middle of next week. So here's hoping for a little bit more of a rally, crude. I would like to see that, because I know me, I don't think you can go bearish at $45. We break that little intraday low. I think you have to respect 43 personally. You may not agree, and I might be a coward. Well, I probably am a coward about this stuff, but I think we should be watching 43. However you feel about it, I think, as we looked at that weekly chart, I do think there's enough evidence to suggest that it matters, and definitely something worth keeping an eye on. So. Certainly, it went from boring to interesting pretty quick. For a holiday day, nice little rally on the day, but hilariously, not really anything changed. Right, gold, womped its head, at the same level of resistance. Silver holding its breakout. Crude continuing to be crude. So, not a whole lot changed today, but it was certainly fun to watch a little bit of an intraday rally, late day rally. I, for one, was happy to see it. I mean, I want some nice, clean, good, solid risk to reward ratio bearish retracements, and I need a couple more days to the upside really to get what I want. Well, cross my fingers. I have no control over it, but we can always hope, right? So, ladies and gentlemen, that'll do it for the market recap today. But as always, it is certainly my pleasure, and I do appreciate everybody's time. If you're new around here, be sure to hit that subscribe button and that notification bell so you can always be alerted to when we've got some stuff going on over here at Tackle Trading. And be sure to follow us over at Tackle Trading on Twitter as well if you do the Twitter thing. If you enjoy the market recap, it is always helpful and appreciated if you do give it a thumbs up just to let us know that we're on the right track and it is helpful for you. With that, ladies and gentlemen, I guess I'll see you tomorrow. One more time for 2018, and then it'll be sayonara till 2019. But we'll say our farewells to 2018 tomorrow. So I will see you then. With that, get the heck out of here, everybody. Happy trading, and I will see you all in the next one.